Today's live stream, we're going to go for about 30 minutes, but I'm going to talk about the neutral interest rate. I think this is really important for a lot of people to understand because the neutral interest rate has really made the Federal Reserve's monetary policy tools ineffective when it comes to lowering interest rates to try and stimulate the economy. Like the Federal Reserve can no longer stimulate the economy by dropping interest rates, even though they have them at 5 or 5.5% on the Fed funds level. Ultimately, the neutral interest rate is significantly too low comparatively to the Fed funds rate. Now, nobody can tell you exactly where this neutral interest rate is. There are a lot of people who predict it at being at 2.5%. Some people say it's at 3.5%. There's other people who say that it hasn't moved much since the great financial crisis, where the neutral interest rates had moved to close to zero, somewhere between 0 and 1.5%. So all these estimates, all these economists, all these people have this prediction of where the neutral interest rate is, but yet there is no chart, there is no website, there is no graph, there is no person who can tell you exactly what the neutral interest rate is. But if you were to define the neutral interest rate, it is the interest rate in which that the Federal Reserve and their monetary policy are neutral, meaning that they are neither stimulating nor restricting the economy. They are neutral. So that is full employment and low and stable prices, right? The dual mandate. And in order to achieve the dual mandate of full employment and stable prices, the Federal Reserve would have to at times either be restricting the economy or stimulating the economy with the Fed funds rate and the level of banking lending to each other in the financial system, which eventually leads to the loans that we take out for credit card debt or car loans or house loans or business loans or whatever it is. So understanding that the neutral interest rate is really low means that the Federal Reserve, no matter what, essentially is in a restrictive mode, always. Like until they can get below the neutral interest rate, which is really low, like close to zero, the Fed funds rate is in a constant state of restriction at this level. And so stimulating the economy is no longer is this not an effective tool by dropping interest rates. Now they can lower interest rates close to zero and give maybe a little tiny stimulative effect to it, but not a significant one if there is a major downturn like a recession. So now you have to understand that the stimulating tools coming from the Federal Reserve is going to be incorporated with fiscal policy. And ultimately, they're probably going to end up being like government spending or like UBI kind of effect. This is all like predictions, in my opinion of it. But really, if you think about it, if the Federal Reserve cannot lower interest rates enough to pass the neutral interest rate to stimulate the economy, then what is it they're going to do? Like, there's really no other choice. So that's where it comes down to the idea of like modern monetary theory. And this is probably why it's such a growing prevalent theme. Like I've even seen more articles coming out about this UBI testing in certain areas. And it just drives me nuts to think about that, considering that there is no way that you can test UBI if not everybody is getting it. If you just give a certain group of people, draw a circle around them, give them a particular, yeah, it's going to be different from all the rest of the groups of people because you're comparing them to that. That is segregated basic income. That's not universal. Universal is giving it to everybody. What you should do is segregate a group of people and not give them UBI and give everybody else it and see how much it affects them. And it would be like, man, this is really dangerous to do. Right? So this is like the craziness to think about what it is that's coming from the possibilities of what it is that they're going to try and do to stimulate the economy, considering that the lowering of interest rates is just not going to be an effective tool for doing it. Now, I think about that when I see so much like when you think about like bad news is good news because it means that the Fed is going to lower rates, which is going to be like a good thing for the markets and for like taking out mortgages and all this other stuff. So like the idea that the Federal Reserve is trying to prevent like bad economic outcomes by lowering interest rates is exciting for the markets. Is just like so counterintuitive to what it is that you feel should be the case when it comes to like stability and like consistency and stuff like that. This is the reason why there is no consistency or stability or anything, because nobody is going to be positioned in the same fashion in order for it to be consistent and stable for everybody. All right. 5 minutes. Well, that's not too long, but anyway, I wanted to see if we could get some questions and some comments going on this. Good morning, everybody. All right. Good afternoon, UE. All right. Labyrinth getting deleted? Okay. Well, good for you, all-nighter. All right. Hello, not cool. Hey, all right. Done. All right. Kick Labby out. Wow. Yeah, I thank you, all-nighter. I don't know what was going on there, but I'm glad you're using your power for good. All right, Aaron, thank you so much for joining the channel. We're gonna come back and do a live stream. I'm gonna try and do that around 4 o'clock West Coast time here. And one of the things that I think I'm gonna talk about in this members only live stream, this is a little bit old. I'm gonna go and see if I can't find the link to it, because really I was going through some of these speeches and different paperwork that I have been printing out for years now. And this is one of them. It was, and you could probably, here, I'll just show you the title right there. And it's Federal Reserve of St. Louis. How does the Fed influence interest rates using its new tools? August 5th, 2020. And now you have to think, this is right about the exact same time that the Federal Reserve changed the way it is that they are looking at inflation. Right, because they used to go for a 2% target. We now know that they don't go for a 2% target, but that they go for a 2% average inflation rate over time. And they give us no real mathematical formula for figuring that out. So now I thought it was really interesting. We just did this is my last video that we just did. Even in the testimony coming from Jerome Powell himself, I mean, it was like, it just pretty much validated everything that I have been thinking and talking about with monetary policy. That, I mean, I can't believe I dialed it in so well. Like, I don't mean to brag about it, but I don't know anybody else who, I mean, there's probably people out there who have, I just don't know about them. But I don't know anybody else out there who dialed in monetary policy as well as I did, and trying to explain it and trying to break it down. I didn't get every single piece of it right, but I got pretty much the majority of it right. And it's because, like, understanding things like this. So understanding how, like, the Federal Reserve conducts themselves as far as interest rate settings, this little piece of information right here, and it's not very long, does a great job of explaining it. And so I think that I would probably do this one in a live stream later today, like say around 4 o'clock or so. And if you really want to understand how it is that the Federal Reserve is going to be setting interest rates going into the future, you really have to understand how they were doing it in the past. And this explains it, and explains right up to the way they do it right now. And then actually, something I found interesting, and I'm going to go and look up, man, I'm just kind of babbling this morning, but the very last paragraph of this, it says, in severe economic downturns like one during COVID-19 pandemic, here we go. The Fed could take other actions to support the economy in addition to lowering interest rates. Some of these tools are only used in, quote, unusual and exigent circumstances and need approval of the Secretary of Treasury. These tools are the topic of our next blog post. So I'm going to go and find that, and maybe we'll discuss some of that in the live stream later today. That live stream will probably go from 4 to about 5, maybe an hour long. We're not going to make it a very long live stream because I just don't think people really want to sit through 2 hours, and not to mention it's just like an hour worth of information is enough to kind of digest at once and then move on. All right. Do you think the neutral interest rate, this is coming from Daily Dose of Clifton's. People said that I should give out the names first too, and you're right, I should. So this is coming from Daily Dose of Clifton's. Do you think neutral interest rate will rise to the point where the Fed has no choice but to raise rates? Well, this is the thing about it. Is just like if you can imagine, this is something that I have actually kind of discussed for months now. It's been one of my theories, and the more you understand the information, the more you understand the Federal Reserve and their monetary policy, the clearer the picture becomes. Like, you don't assume as much, because like a lot of times if we don't know, we just assume. So let's imagine for just a second that the Fed funds rate is at 5%, right? We're just going to say it's there. And the inflation expectation going into the future begins to rise, right? Like, significantly moves up. War breaks out, like whatever, supply chains start to break down again for whatever reason, right? We have inflation scenario that begins to ramp up, and that neutral interest rate begins to rise. It becomes less restrictive on the economy where the Fed fund is, right? So now, if that is the particular situation, would it actually force the Federal Reserve to raise rates during that time? Well, I think that would depend upon what it is that they are looking to get from the economy itself. I mean, they are looking to try and anchor the inflation expectation at 2% for the long run. Like, they don't want to raise the long-term inflation expectation. They want that well anchored at 2%. And they feel that they have done that when you listen to their statements and comments. Now, the current inflation expectation is off the charts, right? But the long-run inflation expectation seems to be doing fairly okay, or anchored at that 2%. When I say okay, I mean that's like by their terms, not mine. So like, the idea that the Fed is going to raise rates in conjunction, like in lockstep with the neutral interest rate, I think they would actually have to see the economy actually performing in a way that was less restrictive, that would then force them to do it. I don't know if the rising of inflation would be like that stimulation that's causing the inflation, like that. I don't think that would be it. I think there would be like supply chain breakdowns that would be causing it, and if there was less restriction to the economy, that would be the stimulative effect that they would want to the economy, right? To try and anchor the inflation expectation. Did I say all that right? It's hard to think out loud, right? And answer these things, but anyway. I mean, it isn't hard to think out loud. I do that all the time, but it's hard to make sure that I'm not, being not babbling it out there. Thanks, Simon. All right, listen to a bunch of Raul Paul yesterday. Kind of vibe with what he is saying. Hit crypto and tech stocks for a good return on investment, at least until 2030. Yeah, I mean, I don't know. I'm not much of an investor. Like, I don't try and give financial advice. I don't try and tell you what to do with the money. I don't know. I mean, when you guys figure it out, maybe you can let me know. Ultimately, I'm just kind of going off my gut instincts on the stuff that I know, that I feel, and I understand. And it's pretty crazy how I have absolutely no expectations of cryptos whatsoever. I never thought about them being anything other than just, nothing. I really didn't think about them being anything other than something that's kind of cool that you can transact with somebody else on the other side of the world, as long as they have internet access and nobody can really stop that from taking place. That's pretty cool. Like, I like that idea. But outside of that, I really don't know what it is that I would feel would be good about cryptocurrencies, right? Now, I mean, I know for a lot of people that right there would be the ultimate, right? But other than that, I don't have any expectations of it. And it seems to be the biggest part of my portfolio quite by accident. And I didn't even mean it to be. I had a bunch given to me. I purchased a bunch. I've like, but it's still like the way it moves is just like, man, it just all of a sudden, bang, there it is. And it's just like, wow, look at that. Look how fast it moved. Look how much it went up. And of course, if you don't have any expectations of it, you can say the exact same thing. It's like, whoa, look how far down it went. All right, oops. All right. Where's the super chat button? I don't know. All right. Busy, unfortunately, so I'll need to review this one later. Have a great stream if I don't get done before the end. All right, man. Thank you, Brody, for being here. All right. Hello from Albuquerque, making barbecue for the Foothills Club for the next Friday. Right on, Aaron. All nighter. Hit that like button. Okay. Durkin 904, my market is in need of some uneducated easing. Happy Sunday. Hello from Russia. I'll text you later, Simon. Was not even a question. That chat was spoken. Long-term listener, first-time chatter. Right on, Jerry. Well, thank you for being here, man. Deja vu afternoons. All right. So rates are going up. Excellent. I was breaking it down, but not on YouTube. That was coming from John. All right, all-nighter. I'm gonna be shopping in Home de facto. I'll be a bit busy. Right on, Jerry. Rates have fallen, but I feel banks are cutting them in high-yield savings accounts. Yeah. I don't know. Like, if you think rates really, this is pretty interesting to think about. Like, had the Federal Reserve raised rates to the point that markets found their own equilibrium. Like, I really think that's what's kind of taken place within the mortgage market. Because you think, like, the Federal Reserve really hasn't changed anything about anything that they are doing for months now, right? I mean, they change all the time on, like, their stance of balance sheet adjustments and stuff like that, but they don't do it on a basis that is so, like, secretive or impulsive or reactive that people are shocked by their events. They give it plenty of time for the markets to know about it. They don't like deviate from their plans when they do these market announcements and in the job owning. So when it came to like the mortgage market, when the people believed that the Federal Reserve was going to be raising rates like incredibly high, the mortgage market found its equilibrium almost immediately. Right. And so it shot from the low threes up to almost 8% in just a matter of what, a month or two? It was like a few months. I don't know how long it was, but it didn't seem like it took very long. And when that happened, it bounced around from like, what, the high sixes to the low eights for the entire time. Like it didn't keep in lockstep with the Federal Reserve. So the market was just like, hey, it found, boom, this is where it's at. And now I have all my reasonings for that as well. But now you think about what's happening today. Anytime the Federal Reserve comes out with statements, or the economists come out there with the statements, or news articles come out there with the statements saying that the Federal Reserve is going to be lowering interest rates at the next Fed meeting. It's not a matter of if, but when. And all these people get this idea that the Fed is going to be lowering rates, lower rates. All the news articles are talking about lowering rates. And how do you get the lower and dot plot and map lowering rates, right? Everybody just keeps hearing it. Then pretty soon they start reacting as if rates are going to be lowered. And then you start seeing the mortgage markets, the rates start to come down. And it's literally just the people's perception, right? So now, if you think about it, that's ultimately like free market behavior taking place. Like the Fed is just sitting there on their hands, like they're not doing anything, but the market themselves does react to that information. But then as time goes on, it finds its equilibrium again based on what the expectations are going into the future. I love, like, this is something that I had talked about for a long time, and it's so hard to understand this as monetary policy because it's not logic. It's like there's no logical behavior within this. It's literally the statements and the behavior of what people are going to react to those statements. And that's the monetary policy for adjusting interest rates and markets behavior. You know? I mean, you think about it, they don't have to do anything. All they have to do is just threaten that they're going to be cutting interest rates going into the future with no actual detailed idea of when that date or how much. Then the markets react, right? They just like, you could just put out that narrative and the gaslighting of it, and then the people will just go and start, behaving into the best of their understanding of it and their assumptions, which is their own free will, because the Fed hasn't done anything to change anything. They just sit on their hands and just make these statements. You know? I have a 5% CD maturing in a week. The rates are still 5%. I'm going to cruise down to the bottom here. We got 216 people watching with 58 likes. Go hit that like button. We'll get more people up here to join in on the stream. I'm probably going to be out here for another 10, 15 minutes or so. Don't worry, guys. This is coming from Yesman Mola. Don't worry, guys. There are infinite USD money supplies. It's called Printer Go Burr. Everyone will be millionaires in no time. Yeah, see, this is... I understand that, but, that's really not a very, clear understanding or statement of what it is that's taking place within the monetary policy right now. I mean, you can just kind of go out there and just say that, but really we're trying to understand what it is that's taking place, and understanding quantitative tightening and how that's impacting the economy, because that's not money printer go burr, that's money printer go suck, right? And it sucks, right? And it's sucking all the money right out of the damn economy, not all of it, but a good chunk of it, and it's going to start creating liquidity issues around the world. It's going to create a situation in which that the repo facility is going to end up, drying up. Like people are not going to be depositing money back in with the repo facility, and there's going to have to come a place in which that they're going to have to people are going to have to understand, right? Because it's not an educational process to try and take away the stigma from the discount window, but understanding where it is that these big banks are going to end up getting their money during that time. Because right now there's so much money sloshing around in the system. Excuse me, guys. There's so much money sloshing around in the system. There was no place for it to go, and that's why this repo facility all of a sudden ramped up. People are like, "Oh man, look at it! It's about ready to dry up. What are they going to do?" Well, they're not going to be able to set interest rates again. Go and take a look at that thing that I talked about earlier. Right? I don't have a link to it in the description. I just picked this thing up right before I grabbed before I started the live stream. But it goes literally in. How did I describe this? This is really good. This is okay. Old tool roles have changed. New tools are being used. So now, okay, the table below identifies the role of the old tools as well as the new tools. Okay, so here's the thing. Interest on reserves, right? Now, the definition of the interest on reserves, this is important because, I'm going to talk about this for the next few minutes, because this is exactly how the Federal Reserve sets interest rates, right? And it's important to understand this part of it, because these things are going to be changing here soon in where it is that the interest rates are going to be established, right? Because right now, this is how it's done, okay? Now, the interest on reserves, the IOR, this is the interest paid on reserves that the banks hold in their accounts at the Federal Reserve. Now, in practice, part of this, right? In practice in the ample reserve framework, which is what we are in. But if we're going into liquidity issues, that means there's going to be tightening, and the ample reserves are going to end up turning into limited reserves. Okay, but right now we're still in ample reserves because banks are unlikely to lend their reserves in the federal funds market for less than they are getting paid by the Fed. The interest on reserves is an effective tool for guiding the Fed funds rate. In fact, interest on reserves is the primary tool for moving the Fed funds rate within the target range. Okay, now, overnight reverse repurchase agreement, right? The ONRRP rate. The interest rate associated on the overnight reverse repurchase agreement, right, the ONRRP facility, which is an overnight transaction in which the Federal Reserve sells a U.S. government security to eligible financial institutions, simultaneously agreeing to buy the security back the next day. In practice, in the ample reserve framework, more types of financial institutions can participate in the facility, I'm not going to go through repo facility, then can earn on the interest on excess reserves. or on the interest on reserves. Because these institutions are unlikely to lend funds for lower than the repo facility rate, the federal funds rate is unlikely to fall below the reverse repo rate. As such, the reverse repo rate is a supplementary tool for controlling the FFR, right? The federal funds rate. So you think about it. Now, I know this is really complicated, but ultimately, the interest on reserves, which is an account that is set at the Federal Reserve when these banks have ample reserves, right? They're over quantitative easing. They load these guys up with balance sheets that are just so abundant, and they have these excess reserves. The reserves go to an account, right? Interest on reserves and the repo facility. And between these two, they can channel the Fed funds rate. This is really important to understand, right? Open market operations, the buying and selling of government securities by the Federal Reserve. Now, in practice, in an ample reserve framework, open market operations served as the primary tool for monetary policy prior to the great financial crisis. Now, this is when they had that limit. Remember, this is how, when they were limited, they would buy and sell treasuries, right? Buy these reserves, these limited reserves off these big banks. So at the end of the day, some of the banks would be in need of reserves. Some of them would have excess reserves. The ones who had excess reserves would lend them to the ones who were in need of reserves so that everybody would be balanced out to operate the next day. That overnight lending rate that was taking place from the excess reserves to the ones who were in need of reserves was the effective fund rate, right? That's how the Federal Reserve used to set interest rates, was buying and selling treasuries off these big banks, right? So this is the open market operations, the buying and selling of government securities by the Federal Reserve. Open market operations served as the primary tool of monetary policy prior to the great financial crisis, while daily purchases and sales are no longer used to adjust the supply of reserves and influence the FFR. No longer doing that because they have these ample reserves. Open market operations are an important tool in today's framework because purchases are made periodically to ensure the reserves remain ample. All right. The discount rate. This is important because this is what the Federal Reserve is going to be pushing these big banks to do in order to set the interest rates, the Fed funds rate. The interest rate charged by the Federal Reserve to banks for loans they obtain through the Fed discount window, all right? Because banks are unlikely to borrow at rates higher than the discount rate, the rate serves as a ceiling for the Fed funds rate. So this is important. Like if the banks can't figure out where it is that they need to go to try and get some money to loan out, because all banks are borrowing and lending. The discount window, where the Federal Reserve basically has, hey, if you guys are running out of liquidity, we have this discount window that you can come to in order to get the funding. However, traditionally, the stigma of borrowing from the Fed using this discount window, however, has generally dampened the discount rate's effectiveness as a ceiling. So although they would love for it to be an effective tool for establishing the Fed funds rate, that stigma behind using it, that these banks look at it and say, if you're going to the discount window, that means you guys have liquidity issues and nobody wants to lend to you, right? So using the discount window is kind of like, is really taboo, right? They don't want to, they just simply don't, like, the banks don't want to use it because it puts a black flag on them. All right. Reserve requirements, right? So this is when you had the limited reserve. Funds the Federal Reserve require banks to hold in cash, either in their vaults or in deposits at the Federal Reserve Bank. In a limited reserve framework, reserve requirements played a certain role by creating stable demand for reserves. However, in the ample reserve framework, reserve requirements no longer play a significant role in policy implementation. Partly reflecting this fact, the Board of Governors of the Federal Reserve System announced in mid-March that it was reducing reserve requirements to zero effective March 26th of 2020. So that is pretty cool little bit right there that really, like, if you could break this down, if you don't understand how it is that the Federal Reserve is establishing interest rates, or this was very confusing, I would suggest maybe downloading this little blog here or whatever it is and trying to like each line one by one until you completely figure it out. Research, understand what interest on excess reserves are, or the reserves, the discount window, repo facility, all that stuff. Like if you could break all that down, you would really understand how it is that the Federal Reserve establishes interest rates and what it is that they are planning on doing going into the future to try and keep these interest rates, right? Or try to keep it established at the levels that they do. You know, they change it constantly. People just assume they don't like change constantly, but they change constantly enough that if you are not following it like almost on a daily basis, you'll have trouble understanding the strategy in which that the monetary policy is going to be conducting itself going into the future. If you like learned how the Federal Reserve conducts monetary policy 5 years ago, it's not the same today. It's like it's not the same thing, right? So if you learned it 20 years ago and you're trying to apply what it is that the Federal Reserve was doing 20 years ago to operate their monetary policy and you're trying to apply it to today, it's just like it's like a whole other language. It's not even the same thing anymore, right? And again, it's like almost having to be sitting in the room listening to their conversations for a long time to really understand who it is that is voting on this monetary policy. These people, they don't think the same way. Like even within the FOMC is what I mean. It's just like they have different ideas of what it is that the interest rate setting policy needs to be at. They don't necessarily communicate like in lockstep with each other, like the exact same thing. They all have very different opinions, and it's not like really different opinions. It's more like timelines and amount, you know, like the levels of it and stuff. But the more you listen to it, the more you read their speeches, the more you hear like their opinions and stuff, the more clear of an understanding you get of the monetary policy. And the point of this whole is the whole thing is so that you can make the best decisions for yourself, you know? I mean, it's already pretty difficult to be drowned in a sea of noise when it comes to the mainstream media, but it's even worse when it's propaganda that's trying to get you to conduct yourself in a particular fashion, and it's literal gaslighting that has taken place. I mean, I have pulled out the propaganda and pointed it out, like straight up called Time Magazine out for spreading pure, straight up propaganda information. And what's really sad about it is that considering, oh, it looks like the family's taken off. What's really sad about that is considering that the the place that it's coming from. Like when you think about it, if you're reading a Time Magazine article and you're hearing about the Economist who they're getting their opinion from, and he's like some like super well known or highly looked at economist who is literally spreading information that is not only like it's I'm not going to say it's inaccurate. It's like accurate for the opinion that it was given, but it was inaccurate to the case that we are experiencing today. And that's the only way I can really describe it, because it's not something that is like a lie. If you don't know, then you're going to assume, and that's what I feel a lot of people are doing out there when it comes to monetary policy. Like, you know, I still read articles today talking about a 2% target, but very rarely does anybody ever bring up 2% average inflation rate over time, and that the Fed was not shooting for the 2% target, but above target, which means that it wasn't 2% that they were shooting for, right? And that's important because people are like, man, they missed it. They didn't get it right. They weren't. No, they did exactly what they were intending on doing. They wanted to raise that neutral interest rate, and if and I think it's happening. I mean, it seems to me it seems like it must be somewhat occurring when you think about like how many people are out there going, how come we haven't seen the recession? How come we don't see a recession? Like I don't understand how come we don't see this recession. And although it still very well could come, it hasn't arrived yet. And if you think about the neutral interest rate is rising, if it happens to be, then that would be less restriction on the economy, making it less, you know, or I mean, not necessarily giving it a stimulating effect, but then you wouldn't be seeing like it getting worse. You'd be seeing it getting less restrictive. So anyway, I don't know, like how far it is, where it's going to go. I don't think we're going to actually learn much about that until the end of next or this year and the beginning of next year as they go into their monetary policy review. And this is something that Jerome Powell said to the congressman. He was just like, when he asked him, hey, do you think you screwed up by keeping those interest rates too low for too long for an extended period of time to make up for the fact that you failed to achieve the 2% inflation target over the last 10 years? Well, he didn't say 10 years, but over the last, previous decade. And Jerome Powell says, yeah, that's a question that we're going to be reviewing here at the end of the year, but we're not even considering, like, think about that. Did you screw up by keeping interest rates too low for too long for an extended period of time? And Jerome Powell answered, yeah, we're going to review that at the end of the year. Right? And like, I don't know, 8, 9 months from now, we'll talk about that. Okay? Buddy, I just loved that. I just loved it. I just laughed so hard when I heard that. All right. What time is it? 3. Okay. Well, now that the family took off, I was going to go with them, but I guess now I'll hang out with you guys. All right. Let's cruise down here a little ways. Okay. Craig, is that what it is? If you still have a mortgage, cash is gaining value relative to your original loan. Granted, interest sucks either way. Buck50 2000, keep my money on the sidelines until October. Deja vu, I rely on my brain and UE for financial news. Cousin Vinny Homestead, the dice man. Yeah, you like that? All right. Let me see. Is there any questions up in here? Okay, you said in your video, this is Buck50 2000. You said in your video the other day, all banks will be using discount windows, so it won't be looked upon basically for free. Well, no, that's one of the ideas, right? That they want to do is that they want to make the discount window less with less stigma. And if you force everybody to do it, then God, oh man, this is a horrible analogy, but no, I'm not going to use this one. But I don't know, like basically, like if everybody did it, then you can't point at them and say, oh, you're the, you did it, like, because everybody did it, right? It's just like, so it hopefully, like, by doing it, I think their idea behind it is that it would somewhat eliminate that stigma, or at least make it comfortable for the banks to use it or something of that nature. But I mean, I don't think that's necessarily something that they have implemented yet. I think that was just an idea at this point. 246 people watching with 96 likes. Let's see if we can get it up to 150 likes here in the next few minutes. I mean, we're already 37 minutes into it, so let's go ahead and just make it like, an hour since the family took off. Okay, this is A to Z. Money that goes to banks is at a automatic discount to be able to lend money to the public. I mean, seriously, how low? That sounds like pure stupidity on steroids. Make a great day. See ya. Okay. Greg, on your balance sheet then. Buck50 2000, you can't keep your money in the bank. It loses 10 to 15% of the purchasing power. Make it work for you. Bob, 9% of your fiat currency. Phoenix Capital Group. What is that? Chafe? Give it to Octobet. You'll see the recession. David's 1113. Jay Bravo on the last video saying Wall Street Big Shorts saying stocks fall coming real soon probably means up for another 10%. All right. If you still have a mortgage, cash is gaining value relative to your original. Oh, we already read that one. Like the video, peeps. Yeah, the average American is tapped out. I thought about that for just a little bit, because something that I thought was really interesting. I've been listening to a lot of people talk about economy for probably going on 20 years now. ultimately since the great financial crisis, but, so 15 going on, 20, because even before that, I was really trying to figure out the economy and I just really didn't know even where to begin or even know what to look at. But something that I found very interesting when I hear people talking about the economy, especially on YouTube and the mainstream media, corporate media stuff, you hear all these people talk about like how bad the economic outcome is or going to be, or they just talk all this negative like kind of views and stuff about like the outcomes. And I think, man, that must be like really scary, like to have that kind of understanding of the economy, right? To see all this negative stuff that is possible that's coming. And I'm like, man, that must suck. That must suck for you. Because I don't really have that feeling. Like it's life already sucked for me. Like I don't like that part is already like I've already experienced that part. So I don't have to worry about the end of the world coming because I've like pretty much experienced as bad as I'm gonna like ever allow myself to get to. So as far as like, hitting rock bottom, yeah, I already did that. Like, but I think a lot of people who end up talking about this stuff have never seen a real rock bottom, like never had it really that bad. Like they might have had to work for a lot of things that they've had in their life, and I'm sure some of them were at rock bottom in their life at one point. But I kind of assume that the level that most of these people are talking at is such an extreme level that it's just like they cannot possibly relate to the economy like the way I do as a working class, trying to figure it out, trying to make up for past bad behaviors, trying to, do the things that are more in a survivalist mode. Like they live in an abundance mode. That's the difference. Like you look at the Federal Reserve, here you go. If you look at the Federal Reserve and you have an abundance mindset like a lot of these people do, because you think about it, if you have a couple $100 million or even just, $10 million, whatever, because $1 million doesn't seem like that much money anymore. I've watched a couple of people blow through $1 million now, and I thought, wow, man, I would never do that. But then I think, man, I guess a million isn't that much. But if you have a lot of money, you're more likely in an abundance mindset where you just don't even see the world in the same fashion. Like everything that you do is you have like this idea of abundance around you in everything it is. In well, not in everything. Like a lot of people might see a lot of abundance in money, but they have like a lacking in relationships or something of that nature. But ultimately, abundance is everywhere, and the people who are talking money from that kind of level are generally drowning in an abundance, right? And that's from like that abundance mindset. But if you're in a survivalist mindset, right? You see things so much differently than a lot of people, and I think that's probably one of the reasons why I was able to call out monetary policy as well as I was from the Federal Reserve, is because most people who look at monetary policy are looking at it from that abundance mindset. They look at the Federal Reserve money printer go brr, right? And they spread this kind of thought. But to me, I'm looking at it from a survivalist mindset saying, no, this is a survivalist action coming from the Federal Reserve itself. This isn't an abundance mindset. This is the Federal Reserve, like, figuring out what it is that they need to do to survive. And I recognize that, right? Because that's the same thing that I've been doing my whole life, is trying to survive. And once I saw it that way, and everybody else saw it differently, like, they're trying to take you for, everything you got. And I'm like, uh-uh. They're trying to survive. They're trying to keep themselves going. That's what's happening here. And once I understood it in that fashion, it made it so much easier to understand the strategy coming from the Federal Reserve. Most people who study monetary policy don't look at it like that. They look at it in an abundance mindset. Pretty interesting theory, huh? All right, moving on. Wait, where did that super chat? There it is. Panda Warrior, thank you so much for the $9.99, man. That's so awesome. What are your thoughts on the Fed trying to cram CBDC down our throats? The euro digital is coming. Central bank digital currencies will never allow us to attain wealth. Why not? I don't understand why it wouldn't allow you to. I think they could limit it. I think they can make it that way, but I don't think wealth is really determined by the money that somebody else is issuing or any of that stuff. Wealth is determined by three things, right? Food, conveniences, and pleasures of life. Now, if you have food and all the conveniences you'd really want, after that, it's just enjoying yourself, just being pleasure, just finding pleasure out there. And so, like, I think about that for myself. Like, okay, so what is it that I need in order to have wealth? Right? I mean, I go and I work real hard and I try and, provide for, this house so my family has a great place to be and all that. But ultimately for me, I don't really need that much. Like, I don't need this big old house. I need it for my family. So I work hard for them to bring it. But me personally, if I was to think if I didn't have the family, what would I need, to be wealthy? I mean, I like ribeyes, right? So I would need a ribeye. That would be like, if I could have that, then okay, so that's pretty simple. I mean, it's kind of expensive, but how hard is it to work to get a ribeye? Not that hard, right? So, a ribeye. I have like cars. I have three of them. Like, I mean, that's kind of convenient. I don't really need much beyond that. Getting around is pretty convenient, having these vehicles, having decent clothes, I guess, like that's kind of convenient too, being able to put on a heated jacket, luxury almost. So I have like, a few like, conveniences there that I kind of enjoy. My cell phone, right? So I got my cars, clothing, cell phone, conveniences. That's pretty good. Pleasure. Hmm. Music and a view. That's all I really want, right? I mean, if I had music and a view and a ribeye and decent clothing on, I think that would be happy. Like, I think that would be all the wealth I would really need, right? After that, it would just be kind of just a pain. Like, cars are expensive and then hard to maintain. That's not wealth. That's a liability, Same thing with like a lot of homes out there. If you're not using it to like as a rental income or something like that, they're expensive and they're kind of expensive to work on. And it's just like there's always like something to do, on them. It's just like it's never ending. I think about what is convenient out there. It's just like there's only three people who are ever going to live independently of the state, right? The prince, whoever that is, the people who are in charge of it all, I guess. The property owners, right? Those who own those properties and renting them out, or just, the business owners, and the capitalist, right? The person who invests into all that. Those are the three people who live independently. Wealth is easy. Wealth is all around. Like, it's like everything is constant. Money flies everywhere out there. And I think about that, like how many times people email me saying, "Hey man, how much do you charge to advertise on your channel?" And I'm thinking, man, if I'd taken every single one of these, I would be so rich. I would have so much money. But I don't want to do that to you guys. I mean, I can do this another way, like with those super chats, with the joining of the channel, with the, those who signed up for Patreon recently. I really appreciate it. I have like 68 people or so who have joined the Patreon channel, and I do not post there very often. And so I did a short writing, and I realized the other day as I was typing that out, it was just like, man, I really enjoy writing. Like, I enjoy typing. It felt good. And I'm like joking around with my wife because I type all day at work. Like, I'm constantly writing up orders and using a computer all day. But very rarely do I sit there and just try to type out something that is long written. Like, most of the time it's a short email, like just a couple of sentences, and that's all it really is. So I'm sitting there and I'm typing away, and it's ticking away, and it's real early in the morning, and the house is quiet, and I'm just going away, and I started laughing, and I'm like, holy moly, I love this. I love typing. And Sarah says to me, she goes, yeah, talk about an ASMR effect. I was enjoying listening to you type. So anyway, I'm hoping to do more Patreon stuff too. And these are the ways that I'm going to try and make money off of the internet, is through is through the viewers. Like, that's the only way. I want to sponsor myself. Like, if you follow the links, the Amazon links I'll put a post. I don't think I have one in this video, but I'll put a link in it after I post the video to the Cantillon essay. You guys go and click on that link from Amazon. Anything you put in your cart for the next 24 hours, I'll get a little credit for. So, and it's actually done pretty well. It's, I think it made $50 last week, which was, I thought was just absolutely cool because it was the first week that I had set it up to do. And sure enough, it brings in a little bit of revenue. So like, these are the things that I'm going to try and do to keep from really using the sponsorships. But ultimately I got to figure out a way to make a lot of money, right? Just like everybody else does. And when I see it everywhere out there, I just don't take it. And it just makes me like, man, what am I doing? But then when I go and take it, it makes me feel bad because I don't feel like I should treating my viewers that way. So anyway, moving on. Thank you for the $9.99 too. I really appreciate it. So, I guess we should actually answer that question about central bank digital currency, shouldn't we? How long are we into this, man? 50 minutes. Okay, man, I just babble. Okay, central bank digital currency is really I do see other nations setting that up and using it pretty regularly. And I think that's probably going to end up being a common thing that takes place throughout the rest of the nations that haven't set one up. I believe that the Federal Reserve is going to be the very last out of all of them, if they even set one up. Now, they have like almost the beginning form of it with like the Fed Now, and they have talked about a central bank digital currency as well, like say a Fed coin. However, when you read through most of their documents when it comes to the digital aspect or the digital dollar, they are really looking more at the regulations and the guidance of stable coins. Like, whether, basically, if you're not understanding of stable coins, if you can imagine a vault that somebody had put a bunch of cash into and then issued out a digital currency matching 1-to-1. So you have $1 sitting in a vault, one digital token comes out that is representative of that actual dollar sitting in the vault. So this is like the stable coin. And they've talked about that. Now, what I find very interesting about it is that in many statements coming from the Federal Reserve and other economists out there, it says that if you change monetary policy, anything that is trading 1-to-1 with the dollar or is tied to the dollar, monetary policy will transfer through into that particular currency. So whether it's a stable coin or another foreign currency that has tied their currency to the dollar, whatever monetary policy has taken place within the Federal Reserve will transfer through the dollar into those particular currencies. And they've mentioned this a few times. So now I'm leaning a little bit more towards that particular idea because of how much they have mentioned it. But whether or not that is the end outcome, who knows? Thank you for the $9.99 too. I appreciate it. Lived in a car for 18 months to get out of debt. Sucked at the time, but best decision I have ever made. Durkin, that is awesome to hear, man. And I know that was probably not real good on the psyche for the 18 months that you did it, but going through that time, that's what really gave you the foundation in which that you were able to now, probably do much better with your life and the decisions that you were making. I mean, not only does it make you humble, but it also makes you well understanding. All right. 243 people with 137 likes. Let's see if we can get it up to 150 here in the next 2 minutes. Most of those rich people, this is coming from Cousin Vinny Homestead. Most of those rich people got no spirit, so it's not necessarily abundance mindset. It's monopolization, meaning they only concern themselves and step on others who have wealth of spirit. Okay. Well, I can I could kind of go with that, but I also understand that things ain't fair. Like life isn't fair. And, although we live in a civilized, we're supposed to be civilized and have like rule of order and law and stuff like that. But ultimately, we are instinctual in nature, right? I mean, it comes down to survival of the fittest. If you were a lion, would you let that lion over there have any of it? No, it's all yours, every bit of it, right? And there's something triggering. It happens in men. I've seen it. Like, especially like I brought this up before, but especially in commercial fishing, you can really see it. When you get into the thick of it, when you are pulling fish like you wouldn't believe. It's just like there's like this, like you can almost see it in the eyes, right? It's just like take it all. You're not even thinking about how much you have anymore. It's just take it all. Take it. Don't stop until you can't take it anymore, right? Until there's nothing left to take, you take it all, and then you turn around and see how much you have, right? And it's this weird, like, triggering thing that happens. It's all instinctual, right? It's like you don't fight that. You're supposed to, you use that. You use that to gain, to move ahead. And it's like at times it probably looks pretty ugly. And I'm not saying that's the way people should behave on a regular basis. I'm just saying when you're in the thick of it, when you're in it, you know, it's very difficult to turn down the, like, sponsorships, right? Because that to me feels like it's the thick of it. Like, it don't feel good, right? But I could take it. I could take a lot of it, you know. Already in a lot of places you can't use cash. Stadiums won't take cash, only credit cards. You can't eat money. Not true, David. I have EBT and have to watch every single purchase and unit price. It's barely enough to survive on. Ninja Baseball Batman says that. Uh, cousin Vinny. They are called Acons. All right, let's cruise down here a little ways. Okay, deja vu. If you earn money and don't enjoy it, you chase it the rest of your life. That's it. And I thought about it too. It was just like, when there was a time in my life where I didn't really like, I gave up on the idea of having money. Like, I didn't, it was just like, money, what's that? Like, who cares, right? And I just like, I really just wanted a life in which that I could not stress about paying my bills. That's it. Like, if I could just not stress about making the electric payment, or, going out and, like, one of the things Sarah asked me, as YouTube was taking off and stuff like that, and she says, I just don't want to have to count what's going into the grocery basket, right? As she's going to grocery shopping. I said, you don't have to ever worry about that again. I said, don't, and she's such a good shopper, so I don't ever have to stress about it anyway. But, she said that for her whole life, since she's ever gone grocery shopping, she always, like, was constantly adding up, so she knew exactly how much she was spending by the time she went to the cash out, or to the cash register or whatever. And she said she didn't want to do that anymore. So that's cool. I said, I'll take care of that part. Don't ever worry about it. And that's it. Like, that was our goals. Pretty simple, really, not much to it. It was just like not stress about bills and not have to worry about how much goes into that basket, and that was it. Like, after that, I didn't care. It was just like anything after that was like gravy. It was all good. And so that's really like kind of the lifestyle that I've always had. It's just I just keep it really simple, and that's the reason why I don't go out and buy expensive cars or take on car payments or anything else like that. Thank you, Intrepid Soul, for the $1.99. I did it again. I forgot to use your link. I appreciate it. I appreciate it, Intrepid Soul. Yeah, but no, it was really cool. There's been, I don't know, close to 40 purchases, I think, and I've made actually close to like $50 in commissions or something like that. So it's really cool. Like, I really appreciate it. And I didn't think, like, I didn't even know how that all worked. And it was actually Lumberjack Landlord who was like, when I was down in Vegas, he was just like, you don't have an Amazon associate link going? And Dion said the same thing. He was just like, bro, get that set up now. It's just like, there's no point for you not doing that. And he's right. It's just like, it's so simple, Anyway, and I am working on the course as well. Like, my sister has really done quite a number. She's really smart on this kind of stuff, and so she's really kind of getting things like kind of lined up to like how I should really present this stuff in the actions that I should take for it. She just had a little baby not too long ago, so she's a very busy mom. Um, so, but I'm working on it, guys. So I'll get that out for you too. When they ask me if I want a receipt, I say no. I'm stacking dollars. Thanks, Intrepid. All right. Let's see here. Bruno's. What is that? Bruno War on awning war. I can't. I can hardly read it. All right. This is so good. I will move to another time zone just to watch UE live. Infamous NYC. Damn, got here late. I will have to rewatch this. All right. Thanks for being here. Here we got Matt. Have you bought any more XOM or Mo lately? Yeah, I did purchase a little bit of Mo, like $50 worth. I try to buy at least into Bitcoin or the stocks, at least $50 once a week if I can, if not every other week. And so I did buy $50 worth of Bitcoin a couple weeks ago, before it moved up, and I'm probably going to buy some here again uh, this week or next week. I bought a little bit of Coinbase not too long ago. Very small purchases that I do. I'm just dollar cost averaging into it, and I should be more like set on like how much I'm contributing, but I really never know how much the ad revenue is going to be from YouTube. So I just kind of do it whenever I do it. Take the advertisement money. I use the free Brave internet browser. I didn't see commercials on YouTube. Well, it's not the ad revenue from YouTube. It's the sponsorships where I actually like physically do a video talking about a particular company or stock for you guys to go buy. And they pay quite well. Like I push some like I don't know, some gold mining companies or something like that, and it's like it's a chunk of cash, it's a chunk of money. But like I said, I walk around feeling like hell from doing it. And I just don't like it. I just don't like the way I don't like the videos. I don't like what it is that I was doing. It didn't feel like natural to the channel or to what it is that I have going on. So it made it difficult to take the other offers that, keep pouring in. And like, I'm literally guys like 3, 4 a week, and these things pay like anywhere, like some of them offer a ridiculous amount too, especially if you're getting really good views. If your demographics in the views are like up around, 20, 30, 40,000 on a consistent basis, these people will offer you like 10 grand to do an advertisement. And that's really on the low end of some of the offers I've seen. And that's literally for one video. Most of them are like offering, anywhere from like $1,000 to $3,000 to do an advertisement on a video. And so it pays incredibly well. So when I see these other people out there who are pumping 3, 4, promotions in a single video, I'm like, oh, holy crap, man, this must be rolling in it, and a lot of people, like even the other YouTubers, are like, dude, are you crazy? Why aren't you taking it? Take it, and I'm like, ain't me. It doesn't feel me, do you think any business in Astoria would do a sponsorship? Yeah, actually, I've had other people like kind of ask about it before, um, but I didn't realize what they were asking at the time, because like a lot of time I'm kind of naive towards stuff. People will come up and like ask me like a leading question, and I just like it just slips right over. Um, but I've had people come up and I was just like, yeah, have you ever taken sponsor? Yeah, how much? I tell them how much they got, and they're like, whoa, and then they kind of like turn away. And I didn't think about like, oh well, did you want to, like, we can like negotiate way down. Like I don't need that much money to throw out like a business that I know locally to give them some support or something like that. I mean, I feel like I've done stuff like that in the past, for other reasons. Infamous NYC, but the utility company raised rates in 2023 and in early 2024. It's crazy. Just have access to electricity and gas 110 for 300 square foot apartment. Wow. Maybe you should revisit those offers. I know, Matt. Matt has probably been one of the most encouraging people out there for me to go and take the sponsorships and make the money. And I I I mean, like, believe me, I really appreciate it because it's a good encouragement that I would really want. You know, my mortgage is paid off. Taxes are $3,000 a year. That comes from TM. Jimmy Hat. The next few years should be interesting. Yeah, it really should be. Alrighty, guys. So that was an hour. I think that's probably good for this live stream. Come back later. We will review some of this. How does the Fed influence rates? We'll talk a little bit more about the neutral interest rate and how that actually is, probably to try and better understand where that is currently. I'm not exactly sure what it is that we would need to look at in order to understand what the current neutral interest rate is. I think a lot of that would come off of like people's current inflation expectations and how they plan, or how long those inflation expectations are going into the future, or how high they are. I think there's so much that goes into trying understanding where the neutral interest rate is that it makes it pretty difficult to say this is what the Federal Reserve is going to do going into the future without knowing exactly how that neutral interest rate is impacting their monetary decisions. This is where it's important to listen to the Federal Reserve, especially when it comes to their speeches. This is why, joining the channel is going to be such a helpful thing for a lot of people who are trying to figure this stuff out, is that we really break it down in a much deeper fashion. We really go into detail talking about these speeches. We pretty much go word for word through them. Once you kind of get a grasp of it, then, you just start making decisions for yourself in a different way. Like it's not like magic or anything like that, but it's more just you become more understanding of what it is that they have, right? And what it is that they're doing. People who say that they're going to change their monetary policy based on the information that they're getting right now, they don't plan on reviewing their monetary policy till the end of the year. So it's going to be continuing in a fashion in which, like, the adjustment of interest rates might happen, but the idea of the average inflation rate over time, right, that's going to continue until the end of the year. And so there is no target. And we have to understand that people who are looking and waiting and hoping and dreaming and wishing for this 2% target to be achieved so that the Fed will adjust their interest rates are really missing it. They are missing it, right? Okay. I'm going to leave it at that. Uneducated Economist, thank you everybody for being here. We got 213 people watching as of this moment, 157 likes. Thank you very much for hitting that like button. We got $11.98 in Super Chat because you guys are always so supportive of the channel and hearing me babble on for the last 10-15 minutes about how I need to sponsor myself. All right, Uneducated Economist, you guys let me know.